how to deal with common bad habits that a lot of us develop as traders. So this will be a little bit different than the last couple. This will be the first that's a little bit more technical focused, but at the same time, I don't think it's really so specific that it's not going to be kind of applicable to most people's styles of trading. All right, so we haven't really been getting into the really specific details of our technical analysis, but I think all in all, I think they're good tools here to use and things to look at. All right, so we're gonna get right into the VWAP. Let me know in the comments if you use the VWAP and how you use it. I'm gonna be going over 3 ways that I apply it, that I use it. Okay, and so we're gonna start with the basic definition. Okay, so unlike most moving averages, your SMA or your EMA, whichever one you use, those are going to vary depending on the time frame and the number of periods. So like your 20 period moving average on a 5-minute looks at the last 25-minute bar closes. So the VWAP is a little bit different because it doesn't matter which time frame, it's going to be the same, because as opposed to time, it's weighted by volume. Okay, so it's going to represent the average price factoring in the amount of volume traded at each price. Okay, so you don't really need to know the equation here. I just included it in case that kind of helps you understand it better, right? But what we're really after is just knowing that it's the average price weighted, right, based on the volume. Okay, and that's going to give us our VWAP price. And usually after the open, that line usually starts to kind of flatten out because a lot of the volume gets done in the first beginning of the day, right? First, I don't know, 5, 10, 15 minutes, right? So that's going to be the case for most stocks. So the very kind of simple, easiest way, you could even say that for these 3 techniques that I go over, that they kind of become a little bit more advanced as they go, but I think overall they're still pretty basic. There's nothing too fancy here. Okay, but this is going to be the kind of the most basic one, which is you're just looking at where is price in relation to the VWAP. Okay, so if you're looking at something that's uptrending above the VWAP, right, that's just confirmation that we have net buying, that demand is in control of price. Okay, and on the opposite end of that, right, something in a downtrend typically stays below the VWAP, right, because there's net selling. Okay, so if we were to kind of apply it to the stuff that we're looking at on a day-to-day basis, and you're a trend player like I am, you often want to look for long entries above the VWAP and short entries below the VWAP. Okay, and you can play long entries from below the VWAP up. A lot of times the VWAP will act as resistance, but like I said, if you're a trend player like me, then you usually want to look for certain kind of entries above or below the VWAP. Okay, so let's take a look at an example here. Okay, so this, right, the purple line is going to be the VWAP for all of the charts that we look at. Okay, so like I said, after the kind of open, you can see it starts to flatten out. Unlike moving averages, most simple and exponential, they'll move a lot more during the day, but because these are weighted by volume, they usually start to flatten out after the open. Okay, so if you're looking to play something long, right, you want to have an entry above this, right, and then expect it to continue the uptrend. Okay, so what I outlined here is just a 5-minute breakout. I've removed all other moving averages, so there's no confusion here, right, and every chart is a 5-minute. Okay, so all the pink lines you're going to see is a VWAP. So this was also a gap up. You'll see that a lot of all these plays will be in line with the gap. We were just discussing pro gaps versus novice gaps. All of these are pro gaps. We're playing with in the direction of the gap. Okay, so 5-minute breakout entry based above the VWAP looks higher, and you could have played some of these other ones that it spent a little bit of time underneath. But like I said, we're looking generally for long entries above the VWAP. Okay, and in the other direction, right, short entries below the VWAP. Okay, so you can see here's a base breakdown, here's another base breakdown. Pink line is your VWAP. Okay, so in a way, it's a nice shortcut to say, is this bullish or bearish, right? Usually That's going to be the most common way that the VWAP is referenced, is that stocks that are staying above are bullish and stocks that are staying below are bearish. Very, very simple, right? Kind of easy, kind of line in the sand to use, okay? Now, the next one, all right, is the way that it serves as a very powerful pullback location, okay? So for something that is uptrending, like maybe the one that we saw previously, staying above the VWAP, right, you can look for it to pull back into the VWAP and for that to serve as a bit of support, okay? Or for downtrending stocks to look for that area as resistance, okay? So, you know, if something's kind of gone, it's nice and extended from the VWAP, maybe you don't want to be playing that next breakout entry over the highs when it's far away, and you can wait for it to give you a pullback and see if it gives you a setup there, okay? So if we're talking about pullback location for the VWAP, then we're going to be talking about buy setups and sell setup entries, right? So in the case of this one, you can see was a gap up, right? Consolidated at or near it, and then picked a direction when it pulled back, right? You can see even crossed below by a little bit, and then from there right back up. So you can see that this location, right, was a good area to enter on a pullback. I think this ended up being really pretty on the 15-minute, but like I said, I wanted to keep these all the same, and we're gonna be looking at 5-minute charts for each of these, okay? And so I think the one fallacy that, or kind of tricky part about the VWAP that I see mentioned a lot, but maybe not explained to its fullest, is if you just say that the VWAP is support or the VWAP is just resistance, right? That can be misleading because when this breaks, you might think, oh, that's a good short. But notice how, right, we have to establish first for downtrending stocks, for uptrending stocks, when should we consider it support or resistance, right? So that's I think the part that you don't want to oversimplify, that just because it broke below the VWAP that it's a good short, because we're looking at this as support for an uptrending stock, and that's going to come first, okay? Similarly, all right, for a downtrending stock, this to serve as resistance, right? Because we don't want to oversimplify and say, oh, it broke resistance, shouldn't we play it long? No, this is a downtrending stock. It's also a pro gap. Our bias is bearish, right? And so this point here, very key critical point when it tries to break above and can't hold. So that's often what I call the crossover. So when it goes from one side, tries to cross over, and immediately rejected, okay? Just like it did for this long. Here's another example here, okay? Now we know, right, this has been downtrending. It's a gap down. It's been staying weak, staying below, tried to cross over, and then again rejected, right? And this ended up closing at the lows. Okay, so this kind of critical point, right, is a really good opportunity for pullbacks, so for sell setups and buy setups. Okay, all right, so you can see that we are combining the first two concepts really to find these key entry points, right? And even if you were to kind of use what the first concept, you can see that there's a little bit of a breakdown right here underneath the VWAP, right? That gave some nice follow through too. Okay, so there's not only one way to do it, but it can come in handy, right? Knowing where it is and knowing where price is in relation to the VWAP. Okay, now the third technique is maybe my favorite. Okay, and so I think the first two probably are the most common. This one I've never heard anyone else talk about, but I'm sure someone else has come to this conclusion or arrived at this conclusion. But I want to ask you just a real quick question here first. What is the purpose of the stock market? Okay, not what is the purpose of equities, not what is the purpose of the exchanges or your broker, but what is the purpose of the market? Okay, just, you know, think about that, right? What is the purpose of the stock market? You can even simplify even more to what is the purpose of a market in general, right? Okay, so the purpose is to find equilibrium price through the forces of supply and demand, facilitate buying and selling. But what is it ultimately trying to find? Where there is equilibrium, right? So yeah, I got an answer here in the room, facilitate buying and selling. Right, with the goal of finding where is equilibrium price? Where do the forces of supply and demand become equal? Okay, so that's like the concept of the market, and same for the stock market. You're trying to find where's equilibrium price for buyers and sellers of this stock. Okay, so that leads us to technique number 3, identifying equilibrium. Okay, especially in low volatility markets, most stocks will find equilibrium price right at the open or shortly after the open. Okay, so what is that going to look like? You can almost consider the VWAP as having a gravitational pull. Okay, so then what you're going to see is that price is kind of going up and down and across it constantly, right? There's almost a magnetic pull to price. Okay, and why it's important to identify equilibrium, right? And if you've been in the room, you've heard this, sideways, stay away, is because you don't want to go after those. They're not going to give you a nice move if they've found equilibrium. Okay, now kind of what drove me to kind of figure out, how do I avoid these? What do they look like? Is because I would be playing breakouts at the VWAP, and then that my breakout would immediately come back down, shake me out, and then close basically where I got in. And I just was so frustrated by this thing didn't go anywhere. How could I still lose money, right? Why? That doesn't make sense. If you're saying this thing is sideways, then shouldn't I only potentially maybe have some upside, but otherwise end up with a break-even play? Unfortunately, that's just not the way it's going to be, because that breakout that got you in, that made it look like you thought now was the time to go up, is going to get an equal move. And that's the only way it's going to stay balanced. That's the only way it can stay sideways, because you have to have an equal move to the move that maybe gets you in. Okay, so let's take a look at them, see what they look like. Okay, so notice here, right, tried to break below that price, right? Below, you had a little bit of a double bottom here and tried to break down, and what happened? Actually resulted in it trying to break out. Okay, now again, you have the opposite. This time, tried to break above this base. What happened? Then it shook out below the base. Where did this close? Right in here. Now, I could pick on ones that are just, that we weren't even looking at, and things that went sideways. But just note that all the ones that we look at were also pro gaps, right? So it's one thing to say, avoid traps that look like traps, or obvious traps, or things that are obviously not moving. What I want to help us avoid are ones that, even within the things that we're focused on, even within the pro gaps that we're looking at, avoid the ones that are going to be stuck sideways. So this would be a perfect example. I see this space here, I play it when it breaks out, I take a stop right there, and then I look at it close right there at the end of the day, and I say, how is that possible? Didn't go anywhere. Yet somehow I can still lose money on something that doesn't go anywhere. That's because the move is met with an equal counter move in order for it to maintain this sideways price action. Okay, so when it's going up, down, off the VWAP, right? That's when you want to stay away. Notice, and I wanted to keep these all the time frames the same for this purpose, right? Notice when these come up and touch the VWAP, they use it as a point in time, it's a critical point in time, and then they quickly back off of it, and then they're gone, okay? And then they don't come back until whatever, maybe they don't come back for the rest of the day, okay? So when they come back to engage the VWAP, it should be a critical point in time. It should tell you something. It's kind of a moment of truth. It shouldn't be up, down, down. It should be, if you're going to go up, you're going to go up once you cross back over and not look back. Okay, so I have more examples of these than anything else because I think they're really, really important for us to avoid some of these things that just aren't going to go anywhere. Okay, this one, gap up, this is actually WFC, had a very nice move in the morning. And like I said, a lot of things will find what their equilibrium price is shortly after the open. Okay, now notice how this came, dipped below, dipped below, dipped below, and just was stuck. It just became stuck. And that was your clue, because if this were going to go, really, that first engagement of the VWAP should have left behind the VWAP and moved. The fact that it could not disengage from the VWAP tells you probably this is not going to go anywhere, right? Very, very sideways. Even if you tried to short the breakdown, right? Very short-lived selling, and then kind of right back up to near the VWAP, okay? This was a gap down. You can kind of tell from the pink line coming from above, okay? And this is what it did the whole day. This is the whole day. Now, it kind of looks like it's in a holding pattern and something else should happen after this. But that's because, yeah, it was where it wanted to be. Came below, couldn't move up off of it, touched it again, tried to break below, no real follow through, up, down, and across the VWAP, right? Because it wanted to stay sideways. And you can just see how closely it closed to the VWAP. Okay, this one had some disappointing earnings, had a gap down, okay, on the CCL. And look how many times it went back and forth across. And there were a lot of moments where this actually looked like a good short. If I just took this pink line off. I mean, it was bearish. I think that as a bias is correct. But look at where it closed. Look what it did all day. Really nothing, right? After that initial drop, it was done. And this should have been the point in time here. The fact that it came all the way back up to break across to the upside should have told you this one's probably done. Okay, so you're not going to be playing any of these other setups, right? That didn't really go anywhere. Okay, again, this one, right, from underneath to above, if it's going to go, right, it should not be toying with the VWAP cross back and forth, okay, trying to run up into it. And see, you can see from something like this, it's not really a good short or a good long. You're not really getting trends or follow through in either direction, right? Was the ETFC like that? Yeah, you know, that's a good point. Once we crossed back over, did I ever mention the ETFC again? Even though we saw the AMTD and the SCHW moving lower, because it told me that when we went after it, that was the critical time. We made one new low, and then we came back up, and we could not get away from the VWAP. So I said, that's fine. At no point did I want revenge. Did I think that that should somehow catch up to the AMTD or the SCHW or anything like that, right? So that's what I'm saying. I'm not saying like you'll avoid every point of, you know, thing that's going to be stuck sideways. But once you know that that critical time is passed and it did not act right, you don't have to worry about it anymore, right? You know that it's probably going to be stuck sideways, that there's not going to be a lot of opportunity one way or the other. So yeah, ETFC probably exactly the same. I don't remember what it did because I don't even have it on my charts anymore. So yeah, wasn't on my charts at all for the entire afternoon. Okay, so let's just quickly summarize, right, the three techniques or the three ways that we use the VWAP. Okay, we want to first prioritize long entries above the VWAP and short entries below. All right, those are the ones most likely giving us indication that there is net buying, net demand, or net selling, right, or net supply. For a trending stock, the VWAP can be a key location to enter on a retracement. That's going to be our buy setups and our sell setups. Okay, those are the retracement plays. If it comes in, tests it, should immediately bounce off of it or back away from it. If it starts to hover at it, go sideways at it, usually that typically means it's going to be stuck. Okay, and so say you get in something, right, and it can't back off of it, right, then you know, like we ran into that today. Like ETFC worked a little bit, then it came back up to hover around the VWAP. We knew not to play it again, right? We were in it for the last new low, and after that, didn't need to bother with it anymore, okay? And then for the ones that do work right off of that, they should bounce right off if they're going to work, right? So it is a nice opportunity, right, to look for that. It's good timing, good risk to reward when you get those pullbacks, right? And they're not necessarily all going to work, but it is a very critical telling moment. And then kind of the one that I personally probably use the most on a day-to-day basis, that I pay attention to the most, are the ones that are just stuck at the VWAP, that are just going back up and down. Because, you know, we like to look at bases, we like to look at consolidation. But this is a good way to know which ones to avoid, which ones aren't really setting up that next new move, which ones aren't pauses that are about to refresh the move. These are actually ones that are paused and going to be on pause probably till the end of the day. That they're just stuck hovering at the VWAP because they've found equilibrium, right? And we have to acknowledge that in this day and age, which is in a lot of trading facilitated, right, by HFTs, that market inefficiency is probably at an all-time high. And so that should only mean that these things that are going to find equilibrium, these stocks are going to find equilibrium, are going to do it even sooner. Okay? And it makes a big difference in our trading to know which ones to avoid, right? Not only waste your time and your capital, right? Because we could be looking at other things. All right. So, like I said, very, very simple. This is kind of the first of the last few that I've gotten into actual charts. But again, I think not too advanced, not that technical. I think it's easy to understand and easy to start applying it in your trading tomorrow. Okay? So like I said, if there's any other way that you use the VWAP, feel free to share. And if you are interested in learning a little bit more about kind of how to become a more confident trader, and also how to deal with your bad habits, there will be links in the description to check those out. All right, so thank you very much. That's going to do it for this lesson on the VWAP.